Hey everyone, Todd here from the Hilton Home Team with your latest How's the Market update for Greater Sudbury, Espanola and Manitoulin Island. There's a lot of noise right now in real estate, and today I want to go a little deeper than the headlines do and really break down what's happening, why it's happening, and most importantly, what it means for you. So let's start with the Ontario government's announcement around removing HST on new construction homes, because this one has generated quite a bit of attention and equally many questions. First, it's important to understand how HST on new builds currently works. When you buy a newly built home in Ontario, the purchase price typically includes HST, which is 13%. There is already a federal and provincial rebate system in place, but these have very specific thresholds. At the federal level, the rebate begins to phase out once the purchase price exceeds $350,000 and is completely eliminated at $450,000. At the provincial level, the rebate is capped at $24,000 and is generally available up to a purchase price of $400,000. But in today's market, most homes exceed those thresholds, which means that buyers are often still paying a large portion of that HST. Now, what the province has proposed is effectively removing or offsetting the provincial portion of HST on new builds to improve affordability. The proposed implementation date for this is April 1st, 2026. However, and this is where it gets important, this is not fully in place yet. Because HST is a harmonized tax, the federal government still has to complete its part of the process. That means until both levels of government are aligned and the program is fully enacted, there is still a little bit of uncertainty around exactly how the rebate will be structured and applied. There are also eligibility factors to consider. Programs like this are typically limited to primary residences, meaning investment properties may not qualify. There may also be price thresholds introduced to cap eligibility, and timing will be critical because qualification is often based on when the agreement of purchase and sale is signed and not when the home closes. So while April 1st, 2026 is being communicated as the larger start date or the target start date, we are still waiting on final confirmations, full legislative alignment, and detailed program guidelines. The key takeaway here is that this is a strong move toward improving affordability and encouraging new construction. But the real impact will depend on how quickly and clearly it is implemented. In the short term, announcements like this can actually increase demand as buyers try to position themselves ahead of these changes. Now, let's shift into interest rates, because this is also a very interesting and nuanced topic. You've likely seen headlines around the escalating tensions in the Middle East, particularly those involving Iran, and along with broader geopolitical uncertainty that goes along with that. What's important to understand is how global events like this connect directly to your mortgage. When geopolitical risk increases, global investors tend to move their money into safer assets, and one of the primary safe havens is government bonds. So when demand for bonds increases, bond prices go up and yields go down. Those bond yields are what lenders use as a benchmark to price fixed mortgage rates. So when yields move, fixed rates tend to follow. This is why you may see fixed mortgage rates change even when there's been no announcement from the Bank of Canada. On the other side of that equation are variable rates. Variable rates are directly tied to the Bank of Canada's overnight rate, which is adjusted based on inflation, employment, and economic conditions here in Canada. So we essentially have two different systems at play. Fixed rates are influenced by global markets and bond yields, while variable rates are driven by domestic monetary policy. What this means for you is that fixed rates can move independently of variable rates, depending on what's happening globally. For buyers, this creates an important decision between stability and flexibility. For homeowners approaching renewal, understanding this distinction is critical because it directly impacts your cost of borrowing. Now, let's bring it all back to what's happening locally, because this is where context really matters. From a market perspective, when we compare March of 26 to March of 25, across our local market area, the data tells a very clear story. Active listings have decreased from 983 to 918, which means we actually have less inventory available than we did 1 year ago. Homes, however, are selling faster, with average days on the market dropping from 47 days to 43 days. The sale price to list price ratio is holding steady at 100%, which tells us that homes are still achieving full asking price on average. Months of inventory remain stable at 5 months, which continues to indicate a balanced market. The median sale price has softened slightly from $440,000 last year to $427,500, but that is a modest adjustment and often reflects the mix of homes that are selling. The most notable shift is in the number of sales, which has decreased from 191 to 168. So when you step back and look at all of this together, what it tells us is not that the market is weakening, but that it is becoming more selective. Homes are selling. They are still achieving strong prices, and they are actually selling a bit faster. But fewer people are making moves right now. That hesitation is largely tied to the exact factors that we've been discussing today: uncertainty around rates, policy changes, and broader economic conditions. So locally, we are not seeing the same softness that you may be hearing about in larger Ontario markets. We are seeing stability with strong underlying demand, just operating at a slightly lower volume. If you're a seller, this means strong results are still very achievable, but strategy and positioning are more critical than ever. If you're a buyer, this means that there is opportunity, but the right homes are still moving quickly. If you would better understand how these trends apply to you or someone close to you, set up a time to chat. We can walk through your situation and build a plan that makes sense based on what's actually happening right now here in our local market. And if you found this update helpful, please feel free to share it with anyone you know who may be thinking about buying or selling this year, because those referrals truly mean the world to us. That's it for this month's How's the Market? Stay informed, stay strategic, and we'll see you next time.